We are talking about strategies to compete, convert, and close. Hey, Arian, welcome. There are no rules on this call. If you guys have any questions, you can chime in. If you have any topics that you want me to go over in the future, you can chime in as well. As you guys know, the mortgage industry and the real estate industry is kind of going crazy. So we are kind of just going with the waves. So as we learn new things, we share them with you, we interpret them, and then we move forward, right? Because real estate is going to always keep going regardless of what's happening in the world, because real estate, from what I've been told, makes the world go round. So in 2025, right, the 2025 market, what agents need to know, interest rates are expected to stay elevated. Last week, I'm going to say a week and a half ago, the interest rates dropped for like one day. So if you are in a situation where you need to refinance and your client is in a situation where they need to refinance, you definitely want to pay attention to that one day. We do still have lock-in rolls. What that means is I can lock your interest rate without you finding a property. I know a lot of buyers are super interest rate conscious. So you definitely want to teach them that don't be so interest rate conscious if you can afford your mortgage payment. And when rates drop and we can get the client refinance, we'll definitely do that right away. And if we did their purchase, we can look into doing a no-cost refinance. But the rates are weird and they are moving at a weird rate. So like I said, rates went up, they came down for a couple of days. Then with all the tariff stuff, they came back again. Then they start slightly going down. So it is a circus as relates to what actual rates you get, but we definitely push to get different programs. I know there's some government agencies out here where they do kind of have some lower rates. I know me and Arian worked on a deal that way and happy it worked out for the client. It's just the time frame. You got to have a seller that's willing to wait. So if you can position yourself to get in the property and it makes sense for you, then you can kind of go from there. Inventory remains low from what I hear, but this is an agent call, so you guys can tell me kind of what your thoughts are on that. But it seems like hot properties do pop up. They say if you stay ready, you don't have to get ready. So you just want to make sure you're sure your client is approved, ready to close fast, and your reputation is everything. So if you allow your buyers to submit offers and they're not really ready and they delay the agent, that's just going to make the agent not want to work with you in the future when you have a more serious buyer. So I think the trick to managing the clients of 2025 is just to be open and honest with them. They want to work with you. They need a pre-approval from a lender that can actually close, right? If they have 2 pre-approvals, maybe they got a situation going on with a community lender that just has this deal that's not as attractive to the seller. You got to be honest and like say, hey, I got to deal with this person and deal with this person. Will your seller wait? If you know it's going to take you 4 months to close with a specific lender, put that in your contract, because now you're setting the appropriate expectations and you're letting the sellers choose, kind of how they want to move forward with accepting that offer. And it keeps your name in vain, right? It keeps you in good grace with the sellers. So that way, or the listing agent. So that way, when you come back, they won't be like, oh, I don't want to accept the deal from you because you didn't close last time, or you let your buyers run you, or whatever the situation is, right? Borrowers need to stay educated as what's going on. If you have buyers, I have a lot of agents whose buyers run them. You know what I'm saying? Oh, I'm going to buy when the rates go down. Well, they're probably not going to go down. And when they do go down, you need to remind them when rates was 2.875, how it was 50 people outside trying to bid on the same property, paying $25,000 over the price. So you think about it. If you're paying $25,000 over list price because your rate is 2.875, you know what I'm saying? How much is your rate really if you pay 25 extra thousand for the property just because the rates were low? So definitely keep that in mind and find ways to motivate your clients, answer their questions, give them good information, but give them a reality check. Like, don't just let them tell you something being unexperienced because you don't want to lose the client, because they're going to end up with a professional that's going to tell them what they need to hear. And they're going to end up with that person that can explain where their mind is at and take it to where it needs to go so they can accomplish home ownership. And keep in mind, I can't see the questions, so my team member will let me know if there's questions. I'm working on this technology, guys. Y'all know I'm a little older. Smart lending, stronger offers, right? So rate buy downs, we can do that to boost affordability. So we can buy down the interest rate if it makes sense. A lot of people is like, oh, if I pay 1 point, does that get my rate a point lower? Absolutely not. In most cases, if you pay 1 point, that may get you 0.25% or 0.5% better. But once again, it depends on how the interest rates fall. The interest rates do not do the same thing every day, just like the stock market doesn't do the same every day. So there's no situation where it's going to be exactly what we said yesterday. We just got to look at how the interest rates fall on the pricing sheet. Down payment assistance programs, we do offer those. We have the CHAC grant, we have the IDA grant. I have a client that is closing in 2 weeks, and she's getting $20,000 from CHAC. She was awarded one of the 1 to 5 grants that were given to recipients. They're going to pay her mortgage for 15 years, right? So she's going to get another like $1,800 a month for that. Then I had her student loans paid off for $40,000. And on top of that, they're giving her $5,000. So she's particularly walking away with $65,000 in down payment assistance. And she is someone on the Section 8 voucher program who was statistically thought to be someone that would never own and always be on Section 8. And she was able to walk away with $65,000 from the government. Absolutely amazing. If you guys don't know me, you should know, get to know that I am a renovation specialist, and I do offer renovation loans, VA, conventional, FHA. We have one-time close. So we have a lot of programs available for your clients based off the property type. And then we have DSCR loans. DSCR loans are loans where the customer can purchase a property and they put in 20 to 30% down, but they don't need any documents, no income, no assets. They're able to walk into that door with that down payment and get into that property without having to pay those taxes to the IRS and all of those good things. Bank statements, we take their bank statements. We're going to look at all the deposits that are normal. Generally, we're taking 80% of those, and then we're going to calculate that over 12 months. And as long as it's consistent monthly, we'll be able to give them that as income, and they can use that to purchase a property without having the burden of paying those property taxes, which it seems like many people are trying to hide right now. How buyers are qualifying differently, right? So we have higher debt to income ratio and lower flexibility. So in some of the programs, the government will only allow a 45% debt to income ratio. What does that mean? That means if you made $1,000 a month and your mortgage, your minimum payments on your credit card note was $450, you would be at 45% debt to income ratio, okay? With that being said, other lenders, if you're not in a grant situation, we can go to 56%. So what that means is that you can have $560 in debt if you made a $1,000 a month in income. Now, I say that using those numbers just so you can understand the percentages. It is a big difference from being able to spend 56% of your income and having to spend 45% of your income. So once again, we are qualifying the buyers based off how it makes sense. Some of my clients will say, no, I don't want the grant because I want to qualify for $100,000 more buying power so that way I can get the house in the neighborhood that I want. Others would say, keep me where I'm going to get the free money. So once again, it's different strokes for different folks. So what we do is we just try to make sure that we are putting you in a situation that makes sense for you and your family, right? Dual income or co-borrower households. So we do allow 3 applicants, right? So you can have yourself and your spouse, your mom and your dad, right? And then you can have grandma and granddad, right? That's assuming everybody's married. That doesn't happen in everybody's life. So in the situation where it's not a marriage, you can have yourself is single, your mom is single, and your grandmother is single. So you can have 3 applicants. The only way you can have 6 borrowers on a file is if everybody is married. So if you have a double applicant per application, the max is 3. If you're married, you can have a total of 6 people on the file. And I know that was a little high level. I could break that down for you, but just letting you know you can add borrowing, occupying buyer to your file to qualify, and you can have non-occupying buyers, meaning they're not going to live in your property, but they make enough money to give you some leverage to be able to purchase at a higher purchase price. Growing the need for lender-led financial coaching, right? So with that being said, you want to make sure that you are the expert. A lot of buyers, they just need information. They need options. They need to exhaust their options. And some of them are going to go with the original thing. They just want to talk out what they're thinking and make it make sense for them, right? I had this client, and it's crazy because I haven't talked to them in a little while, and they just referred me a client yesterday, so I can't wait to give them a call. But the husband called me. I was extremely busy. This was when I first started my career, and he wanted to purchase a home for $40,000. Nobody would call this man back, okay? Nobody would call this man back. And he was like, look, he had been through it, so he kind of waited on me. I was at a closing. I was like, look, I'm at a closing. You know, I've set aside this time to talk to you. Are you available? He said, yes. We had our conversation. I went over all of the details for the $40,000 house. Not only did he not buy a $40,000 house, he purchased a $400,000 house in Beverly, right? And then found out he was a realtor and his wife was a realtor. And I've probably done 20 transactions that they referred me since then, just based off me taking the time to talk to them about his $40,000 plan, which really didn't make sense, but he needed it talked through, and everyone else was ignoring him because it was only $40,000. Their commission was going to be very little, right? But when you coach your clients and you get them on track, and if somebody's calling you for a $40,000 deal, they're probably an investor, and guess what investors do? They grow their portfolio, and even if they got it for 40 and rehabbed it, that may be something they're going to sell for 400 later, that you now could be the listing agent because you took the time to hear them out, and you might even learn something along the way. So definitely become a coach, right? For your clients, they need real estate. They need to talk through it. What they're seeing on HGTV and social media is not real all the time. Like, I am literally live right now on YouTube, Instagram, and Facebook. And the reason is that I took time in 2025 to go live is because I'm giving you real free information. And I know it might not be as exciting because I'm not selling you on anything and I'm not offering you to make $10,000 in a day, but I am here to tell you the real deal. And I am a guideline guru, and I understand what it takes to help you become a home buyer. And I'm committing this time to you free of service because I want everyone to win. Let's see. Pre-approval as a power tool. I always tell people you don't want a pre-approval, you want a pre-approval, right? A pre-approval is your buyer's strongest asset. I've worked with hundreds of agents, 1 year, 271 in the same year. And all agents at the end of the day, they want to close on time. They would rather have the ugly truth than the BS lie all day long. Actually learn that from a realtor, right? So with that being said, you just want to make sure that your buyers are ready. One, gas costs money, your time costs money. So you don't want them flipping a coin and then they end up not moving forward because they really wasn't that serious in the beginning, okay? Speeds up offers. It builds the seller's trust. They want to know that you can get that deal done. Had a deal yesterday, the seller went with another lender. I responded and I said, thank you so much for considering the offer. Just so you know, I want to make sure you understand that my buyer can close in 3 weeks. They've been through underwriting. I verified their income and assets. They are ready to close, okay? Came in this morning, and I said, and I'm here for you if your other offer doesn't work out. Came in this morning, whatever happened to that last offer, I now have a contract for my client, right? And all I did was respond and told them the facts. So now guess what is my turn to do? Deliver. So now I'm about to close that deal in 3 weeks. So now that listing agent will remember me. So that way, when we go for the next property, and that listing agent, he's like, okay, I had a great experience with Natasha. We're going to go with that offer because the offer doesn't matter all the time. If the property is only going to appraise for $500,000 and they get 1 million offers, who going to close and who going to close on time is the magic question. Because unless you have some escalating clause where you're paying over the list price, you honestly aren't going to pay more than what it appraises for anyway. So lenders do matter, and it ends up being that you need to have a good lender, right? We make sure that your buyers are ready to make an offer, ready to close. And I do work on Saturdays and Sundays because my goal is to execute all of the contracts over the weekend before my other people that only work Monday through Friday come in, and then we can already be under contract, right? And don't worry, I do try to take off a few days during the week for some me time, but I do try to make myself available on the weekends so that way we can take advantage of those offers, right? You want to win the competitive offer game. Lending letters tailored to the property and situation. All my pre-approvals generally will have the property tax that rents for that particular property. If I pre-approve your client for a 3-bedroom with $2,000 in rents and you find them a 1-bedroom and the rents are only $1,000, that can definitely change your pre-approval. Custom strategies, 2-to-1 buy down, seller credits, escrow timing, all of those things are important. The earnest money that you put on the contract, how fast you can close, what your demands are, if you're asking for seller credits, and all of those things. Now, I have a lot of bougie listing agents, they like, well, does the client really need the seller? If a client gets the seller credit, if a client gets a $15,000 seller credit and it's allowable credit, they need $15,000 less dollars at closing. So just because a client asks for a seller credit does not mean the client is in a bad situation. They just might want to keep some of their money in their bank account. And sometimes I have to explain that to the agents because we are in a competitive market. But if you ask for 300, I offer you 310 with a $10,000 credit, you're still getting 300. So for all my agents that look down on buyers getting closing cost credits, it's not a terrible thing. We don't want people to be house poor, but look at the bottom line. We're still giving you what you asked for. We just have a creative way to make sure our borrowers have some funds left over for savings for the next property or just for a situation that may come up that can put them in a bad situation, right? So definitely accept our seller credits, guys. It doesn't mean that the borrower has no money and doesn't qualify. It just means they want to limit the amount of money they want to bring to the closing table, okay? We're issuing our pre-approvals fast. I do have some slow ones. If your client is variable income, if your client has a lot of businesses, they file their taxes and they owe and they haven't given me what they're going to do, their plan, I plan to not have to get a plan after you go under contract. So if your client is in a situation where it's a flip of a coin, I sometimes will ask for additional documents before I issue the pre-approval. However, if your client sends me what's needed, you generally can get a pre-approval from me within 2 hours is our goal. Everybody's not that easy, but it's hard to get clients to send documents, believe it or not, in this market. So with that being said, we're gonna, keep it rocking and rolling and getting them out fast. But the ones that take time is because those are the ones that would take time, stress you out under the transaction. And we want to take care of all of that now. So that way you don't have to deal with it later. And that's pretty much all I have for Lunch and Loans today. I know that was pretty fast. I didn't want to keep you guys too long. I know everybody's time is important. We will be meeting every Tuesday at noon. You guys can scan the QR code for the next topic. If you have topic suggestions, you can definitely let us know. We can do one-on-ones with you as well. Thank you guys so much for joining us today. Thank you, Dominique. And then for my future events, I might have another slide stack on here. So next Wednesday, or that's actually tomorrow, we are going to be doing commercial real estate. It's going to be at Ebony Lucas's office. This flyer hasn't been updated yet, and it's going to be at Nitro Nostalgia, which is a infused ice cream. You can get it with liquor and without liquor. It's on 43rd and Cottage. It's the one right up from last week's stock class. And then our final finale is going to be at the Royal Bistro Live. We're going to talk about estate planning. If you guys don't have a will or a trust, please, please, please get a will or a trust. Even if you don't come to my event, we always talk about we building generational wealth, where it doesn't matter if your assets are held up in probate and you can't distribute them properly because you didn't plan accordingly. So definitely come on out and let us know. We're going to be emailing you guys so you can RSVP or you can scan the QR code below. And after that, we're just going to be monthly up until the expo. I do have the expo every year. It's called Black Friday Reverse. It's on Black Friday, which is the day after Thanksgiving. So we'll be having monthly meet and greets with State Representative Ford, as well as Ebony Lucas and other people on the board to give you guys information leading up into that event. The goal is to make the events a little more intimate so that way you guys can ask your questions, because I know the expo was a lot. It was a lot of moving parts. It was a lot of information. So we want to help you break that information down. But other than that, you guys have a great day. Thanks for tuning in with me. Let's stay connected. You can always reach me at Loans by Natasha on Instagram, Natasha Robinson on Facebook. And it's easy. If you can't find me, you can Google me or just go to loansbynatasha.com and you'll be able to have all my information. You guys have an amazing day.